All right. Hello. Hello, 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 hello. We are officially live on another. Damn, that failed. It was supposed to go epic. On another market open. Here we go. What's up, everybody? Welcome back. Happy Friday. Happy Friday. Happy Friday. It is February 3rd, 2023, 3 days into the month of February. We have big tech earnings to cover. We have Ford earnings to cover. We have the jobs report that came in piping hot at 517,000 in January. Unemployment is at a 53-year low, and the idea that this is going to be a unemployment-induced recession is getting harder and harder to believe. Ahad, what's up? Kane, Cameron, Chase, Uriel, Felicia, Wen, Vayner, Chucky, hopefully soon. Joseph, Dan, SJ, Miyoko, Jason, Zocold, Alvarado, Quarantine Quartet, Max, Shem, Pasta, UCUS, Sam. Sam is here. What's up? ERP Pro, Michael. Good morning. Good morning. Good morning, everybody. Hope everyone's having a great day. All right. So, let's get into big tech earnings. That's the big thing we got to talk about, and then we'll go into a different thing. I'm here to hear Amit instead of Tip Ranks Julie. What is this world coming to? Shout out to Tip Ranks Julie. She's awesome. I've seen I don't know if she goes live, but she does like videos, right? Tip Ranks is a great product. It's cool. Okay, so let's talk about like big tech. I think that's kind of the first thing. We'll do headlines, and then we'll get into some of the jobs report stuff. So we saw Google, Amazon, and Apple all report. All of them pretty much missed on expectations outside of some revenue numbers, right? So when we think about Google, they missed on earnings per share by 13 cents, and they missed on revenue by like, I don't know, 40, 50 million, something like that. The real reason Google declined after hours, and it was still up because it went up 7% on the day, went down 4% on the day, so it was like net up 3%, is because the call didn't go that well. I mean, analysts were asking Sundar about AI, and he's like, look, it's coming. We know it's here. We know we have to like make a splash in AI. And like, he didn't really give that level of clarity that I think one as an investor needs to feel that Google search won't be disrupted. Now, do I think Google search is going anywhere? No. So do I think this is still a little bit of a bargain discount? Yes. However, we need more clarity from Google on what they're doing on search. And so that was kind of the issue why Google declined. Amazon actually beat revenue expectations by $4 billion, putting up 150 versus 146 billion. Earnings per share, they did well on. A lot of other key metrics they did on. Advertising, they beat by I think like 70, 80 million. They did 11.86 billion versus like 11.3 billion expected. The problem with Amazon is guidance sucked. So they said 121 to 126 billion in guidance next quarter, which is still insane to imagine. They're doing $120 billion in 90 days. I mean, that's just ridiculous. Now, the key thing about Amazon is their margins suck when it comes to the retail business. AWS is carrying most of that. So that is what it is. AWS is not growing as fast as it needs to, even though it's carrying the business. But that's the reason why Amazon declined. The reason why Apple declined or is relatively flat is because everything just slowed down. Apple has not missed earnings since 2016, and they missed across the board. I mean, a couple things like iPad revenue was up, but everything else was down. iPhone revenue was down 8%. The S curve of growth for Apple is gone. I mean, unless it's the car or unless it's the reality headset, it's probably not here, And so the question becomes, what is in there for Apple? And it's just not a lot at the moment. Good morning, everybody. Good morning, Amit. This is a clown market. We should be celebrating that unemployment is down. Shows we're not going into recession. Let's get into that right now. So, I mean, big tech outside of Facebook kind of crapped the bed, right? And Netflix as well. I mean, Netflix did pretty well. But this is not what Jerome wanted to see. Jerome did not want to see payrolls increasing by 517,000. This is one of the best times in the history of our country to get a job. Non-farm payrolls increased by 517,000, far higher than the 187,000 market estimate. Unemployment rate fell to 3.4%. This is the lowest jobless level since May 1969. I mean, if the idea was we need to induce demand destruction by getting people to not have jobs by raising interest rates, it's not working. And so it'll be very interesting to see if inflation comes down while we're increasing jobs. This is one of those weird moments in history where we don't need to massively induce a recession to get rid of jobs in order to get rid of inflation if it's just coming down naturally on its own. And it'll be a phenomenon that'll be studied for many, many years. But that is the reality of what's happening right now. Big tech, look, they didn't destroy earnings. It didn't kill the market, especially because the market's up so far. But they didn't grow at the level we want. And I think that's all you can ask, for them to be pretty much at expectations, if not slightly miss or slightly beat. That's not going to tank the economy. So for the bears that think the S&P is, dropping to 3,400. Big tech definitely did improve that would happen. Ramu, good morning. ChatGPT narrative has been completely exposed. It's a complete joke. So I actually had a ChatGPT experience last night. Last night was the first time I had to look up something, and I went on Google, multiple searches, didn't get an answer. I randomly was like, well, let me try ChatGPT. I tried it, and the answer I got was like, oh crap, this is like, this was good. It was a specific thing I was looking for in New York, and I got the answer in like 5 minutes, or sorry, like 5 seconds. Whereas Google, I was like going through so many links, and that's because again, user generated content is much harder to get the answer from versus a machine just telling you exactly, right? Let me just tweet this out. And so as a result of that, ChatGPT was actually really good for me last night, and I didn't expect it. SoFi down 3% in the pre-market. Palantir, we hit $9 yesterday. It is down 5.4% today, which makes a lot of sense. I did not expect Palantir to be at a $9 level for a while. I didn't expect a lot of things in the market to be there. So, that makes sense that we're down. I have a video coming out later today explaining the $50 million Sampo extension. So we will be talking all about that as well. Good afternoon from Portugal. Awesome. Thank you for being here, man. Edgar, I appreciate you. It's a white collar recession, blue collar expansion. Work from home is getting destroyed. Yeah, and I mean, a lot of the tech jobs are getting hit, but it's still, the grand scheme of things is what, 84,000 layoffs, which is a lot. But I think you would need to see a lot more for it to be bad. But it is more of a blue collar. And a lot of the people that are losing their jobs, they have a lot of savings because they worked at Google for years, right? So they have a ton of money. And so at that point, Jim Cramer said this is a bull market. Yeah, this is also the part that's a little, I don't know, man. Jim Cramer said, hey, it's a bull market. Like, I don't get how the inverse Cramer is right every time, but it's right every time. And for someone to say it's a bull market, it's a bit tough to imagine it continuing to be a good margin. If Apple missed Q4, imagine Q1. Yeah, look, Q1 2023, it's not like demand or anything is going to get that much better, especially Apple said their supply chain issues are an issue. I mean, they're working through it, but they're saying it's bad. ARK, by the way, down 4% right now in the pre-market. Spotify down 2%. Tesla even, but Tesla is still at 184. I mean, Tesla just had a phenomenal month. For whoever got Tesla, should be feeling really good about themselves. Look at Coinbase, down 10% pre-market. Did Coinbase have earnings? Why is Coinbase down 10%? Coinbase earnings. I don't think they had earnings. They have earnings? No, they didn't have earnings. Yeah, so wait. Yeah, no. That's weird for Coinbase to be on 10% in a day. Like that's like literally even before the market opens. That's interesting. Intel down 2%, Ginkgo down 6% after breaking through $2 yesterday. Shopify down. So we're seeing people take profits. That's what we are seeing people do. People are not trusting this rally. They bought some stocks at a certain level. They're like, you know what? It's up 20%. I'm taking my money and I'm running. I'm not DCAing. I am taking it and I'm going to the bank because I want to cash in on some money. And I can't blame them. You look at this, the NASDAQ. Up 3%, 12,200, breaking right through 12,000. S&P at 411, down 1% in the pre-market, but it was at 416 yesterday. I can't imagine people who bought at 340 thinking this is like a blessing. Let me not, waste this opportunity and take some profits. I mean, I can't blame them. Absolutely not. Because coin was up 25% yesterday. Well, yeah, that's true. Coin was up 25% yesterday. That's true. That's a good reason for why it's down 10%. Is this a sus market? I think sus is probably the best word to describe this market. Nick, what's up? CLSK. Yeah, this is Bitcoin mining energy stock. Wow, down 5% pre-market as well. I got to give it to these guys. I talked to the executive chairman, Matt Schultz of CleanSpark, and they sold Bitcoin at 69,000, literally. So they cashed out at the very top. They did something many of these Bitcoin mining firms weren't able to do. So shout out to them. Amit, did you see the leak of the Cybertruck? Yeah, I saw the leak of the Cybertruck. It was dope. It's awesome. It's going to be great to see when it gets on the roads. Hey, guys, I'm sick today, but here I am. Ray, appreciate you being here. Hopefully I can give you some value over the next 40 minutes while you're sick, and you can just sit back and relax. I am terrified of today. Well, Glitch, you're short the market. So, I mean, if we crash and burn, then, it should be okay for you. All right, 9:30 a.m. February 3rd, 2023. We are ending out the week. We are ending out February. Thank all 200 of you for being here. It means the world for me. The stock market is now open. Wake your ass up. Isn't it so cool that we ring this bell and then like at the actual NASDAQ in New York, which I'm going to today, by the way, they're like ringing the actual bell and we're ringing our bell. But like our bell is cooler than their bell because their bell is like, of course they have to do that. But for us, we like built this community where we're doing. So it's way more cooler when we ring our bell. All right. Apple at 149, Meta at 184, Google 103, Amazon 105, Palantir 844, SoFi 737. Everything is red. Bitcoin falling down from 24,000, 337, still up from 15,000 on the lows in January. So not bad. Bed Bath & Beyond is still up almost 100% from its lows, but it's down today. Carvana down 7%. G, who could have saw that coming? NASDAQ going below 12,000, down 240 points, around 1.9%. Spotify 2%. Tesla down 1.4%. Snapchat down 4.7%. General Motors actually up. Wow. GM went up from 38, but it's down today at 41. Nvidia still an amazing stock. I mean, just look at Nvidia right here in the past month. I mean, goodness gracious. 138 bottom on December 27th. And then if we go to a year, we have the 108 bottom on October 13th. Just absolutely phenomenal. 100% gain within the past 3 months. Nvidia is one of those stocks I always thought was a bit overvalued, a bit pricey for the premium, but investors obviously don't think so. They're willing to give them that valuation. Netflix at 362 as well. Now is the time to buy puts, not the day we bottomed. I agree. That is true. Only 500 billion in interest owed on debt. Everything's going. I thought it was actually 838 billion. That was the number I saw, not even 500 billion. So it's even more than that. Sold my Palantir YOLOs for 312% profit yesterday. Hopefully buy some more today on the dip. Yeah, not bad, Uncle Jess. Look, I can't blame you guys. This is at the end of the day, we've been so brutalized by the market. Taking profits is not the worst thing in the world. It's just not. I could very well 3 to 5x my entire account today. So scared. Glitch, do you have things that expire soon, or do you have like long shorts on the market? Everything fell apart once. This is so true. When Elon went on SNL and everyone thought Dogecoin would go to the moon, let's look at Doge right now. It absolutely, like, everything just didn't happen that way. Like, I remember Dogecoin, it was at like 57 cents and we thought it would all go to 69 or something, or it was at 70 and we thought it would go to $1. And that didn't happen. I had so much FOMO missing out on the Dogecoin, like so much FOMO. I can't even explain. Does the Dogecoin guy still make videos? Hold on, let me look it up. Dogecoin millionaire. Does he still make videos? He hasn't posted in a month. Yeah, 2 months ago he posted his last Dogecoin video, so I guess he's not making any more videos. Bro, he was up 2 million at one point and he didn't sell. I get why I did a video on my channel once called Why the Dogecoin Millionaire Didn't Sell. And the whole idea was like purpose in life is way more important than money. And he felt he was leading this movement. And like when you have this movement, you have like this joy. And all of you guys are going to be like, that's BS, take the money. And I get it. But still, it's like that's what people feel. Bro, people need to stop people shaming for selling. That shit is stupid. I agree, man. No one should shame anyone for selling at all. I mean, if you've been down so much in the market and you make, a couple $100 because you bought something in January and it's up big in February, I can't blame you. I mean, there's you take the money, packet it, and then you buy it later if we get a pullback. If not, then you keep going. That's all. So Chris also sold Snow. That's big news today on this live stream. Christopher Patel sold Snowflake. He's out of the position. Jennifer, thank you for being here. I think it's the first time you're in the stream. Awesome. Thank you so much for being here. Chris sold Snowflake. I asked him, I'll show you guys the tweet right now. I was like, hey, Chris, are we getting back into Palantir? Because obviously, by the way, let's pull up the chart on Snowflake before I show you this. I haven't checked Snowflake in a while, but I think it got to a little bit of a too frothy of a violation. Not violation. It was a violation because the valuation was so frothy. Yeah, look at Snow. 169, market cap of $54 billion. It's trading 3 times the TTM, the trailing 12 months revenue, than Palantir. And then you got to ask yourself, is the company worth paying 300% more of a premium for than Palantir? So Chris sold it. The bottom was at 110. It's up at 170. Snowflake's always been a pricey number. Price to sales of 28. It's one of those companies. It's just not that exciting, in my opinion, to hold for a long time. Brad Gerstner, the head of the Altimeter Fund, he's been DCAing Snowflake since 400, and so he's down massively on that position. He goes on CNBC all the time to talk about how Snowflake is revolutionary. He's just holding a bag. That's That's all. It's not revolutionary. He needs to sell this. I'm glad I made it. Did you already talk about the non-farm payroll coming in hot as F? Yes, I did. So that non-farm payroll, for those that don't know, we were expecting 186,000 jobs. We got 517,000. That means employers are hiring people for jobs because there is demand for labor, which means the economy theoretically, like economics 101, should be growing if there's more people into the system. The Fed wants to get them out of the system because that means there's less demand, which means people stop spending less money and we reduce inflation. But if inflation goes down on its own, where the Fed did 25 bips and where maybe they're thinking, hey, inflation's going down and we can get to a soft landing without having to destroy jobs, then we have a whole different scenario of things that are going on. Brad has been in Snow pre-IPO. Yeah, but he said he's been buying since 400 as well. So, I mean, maybe his average is good, but I don't know. When is Chris coming to Palantir? Well, I know Chris is coming to the Palantir Weekly tonight, 11 p.m. So make sure you are there because we will be talking all about Palantir's epic week. Palantir expanding into Japan. Want to see more companies out there using it in time. Yeah. Let's go into CNBC. Let's see a little bit of their analysis on what's going on. Let's look at Ford's earnings. Ford's earnings was pretty bad. I didn't get to go too deep into it. It just proves the case, obviously, for Tesla even more. So let's take a look at Ford.
Everybody, Ford shares are trading lower this morning. This comes after the automaker's big miss when it comes to earnings. The company says that execution issues plagued operations. The CEO, Jim Farley, was very direct about Ford's issues when he spoke last night to our Phil LeBeau. Phil, what did he have to say?
Becky, there is a level of frustration that we heard from Jim Farley during our exclusive interview. It's clear he realizes that the problems at Ford are substantial. We're not going to go over the numbers from the fourth quarter, but the main thing to focus on, what a lot of people are focused on, is the fourth quarter miss basically comes down to this. $1 billion in lost volume, vehicles, 100,000 of which they did not make below their plan of building those vehicles, and another $1 billion was due to higher than expected costs in the fourth quarter. Here's Farley talking about the cost issue that Ford faces right now.
We lost about 100,000 units of production, and that's very material for us. Came in late in the quarter. Most of it is chips, but some new supply issues. Now, you could say, hey, that's just kind of bad luck for Ford. That's not how we see it. We could manage our supply chain all sorts of different ways.
Okay, so obviously Ford not doing as well as they need to be doing, missing under 100,000 vehicles. Let's look at some comments. The Wheel Deals Trading Journal. People need to chill out and let people do whatever the hell they want with their own money. This really needs to stop. Guys and gals, investing extremely personal and subjective. Yeah, I agree, which is why taking profits is not bad at all. Jennifer says Papa Powell is not going to like that non-farm number. We are getting multiple hikes, in my opinion, possibly 50. This is the opposite of what they want. So I agree with you, Jennifer. If Papa Powell, I like that name you call him, is basically saying, look, we don't like the way the economy is going from a jobs perspective. Therefore, we need to force this recession. That is one avenue. The other avenue is they see the CPI in February that comes out, which I think is next week. And if we get to a decent level below and they feel that it can happen naturally, which doesn't really make sense because if you have more jobs, there's more demand. So it shouldn't happen naturally. But if it does, then I think the Fed can't induce a recession by raising rates. That would just be ridiculous. Granted, the Fed does ridiculous things, but I mean, I don't know. It would be hard to imagine they just rigorously decide to raise rates regardless of what they think about what's actually happening in the economy. Did you get Gary Vee's attention today? So I was not able to go yesterday. It was a long story. My sister needed my car registration issues, blah, blah, blah. But tonight I'm going, or today. So follow me on Twitter because you're going to see all the updates as I'm tweeting at Amit is Investing. It's going to be a fun journey today. I really wanted to go yesterday, and then, stuff happens. So spent yesterday doing work at home, and we'll be out there today. I don't know if we're going to get Gary Vee's attention today, but we'll be out there today. I hope it's 25. They do 50. The market's not expecting that, and then it'll be red for a while, in my opinion. Yeah, it's just a question of, if they're able to do a live stream. We're going to be recording the whole thing. So it's better that we record it versus live stream it because we're just going to get way better quality edit videos. But we'll go from there. Let's look at big tech earnings. Don't look compelling enough to buy. So this analyst does not think any of big tech really was that exciting at all. Here we go.
Joining us right now to talk about all this is Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. What do you think about this? Maybe whiplash is the right word?
Well, I think that Meta, the expectations were so low and the valuation was so compelling at 13.4 times headed into the print, Andrew. And then when they talked about all the cost cutting, that was really the game changer. So the quarter itself was okay, right? But it was the cost cutting that they finally got religion on. And that's why I think Meta really took off, right?
Yeah,
so
then you saw its peers go in line with them until they didn't. And we heard this news yesterday on Apple, Amazon, and Alphabet.
Right. And that's because all three of them didn't produce good results. But at the same time, they had rallied so substantially, right? I mean, Apple headed in was up 16%, Google up 21%, and Amazon up 31%. And all of these stocks trade at much higher multiples. And the expectations were pretty high, especially after Meta, right? So look, net, none of these were game changers, Andrew, but none of them were compelling enough to say, I'm going to go out and buy the stocks today. Okay, let me walk through each if we could for a moment together. Apple, the number here, first reporting its first miss, we should say, since 2016, revenue falling 5% to $117.2 billion. It missed those estimates. The company saying manufacturing disruptions in China hurting its ability to deliver premium iPhones. And CEO Tim Cook told CNBC, quote, in terms of production today, it's back to where we need to be. And so that problem is behind us. Steph, I want to get your thoughts on Apple, but also I just want to throw into the mix. The other thing was you saw iPad sales. They're expecting to be down double digits. Services will be up. iPhone sales are still going to be off. And I think the expectation is that's going to continue. Yeah, it will continue. And a lot of that is supply-driven issues, right? So they've got to iron that out. But iPhone sales, look, they were down 8%. That's pretty disappointing. Wearables was down. Macs were down. So that's the negative, right? And that's the reason why they missed the earnings. On the flip side, their installed base is now at 2 billion, right? And gross margins were better than expected at 43%. And that is because of cost cuts, but also because services was okay, right? Services came in at about 6%. So that's the bright spot. This is not like a terrible situation. It's just that the stock.
Let's look at that. So Apple revenue, 13 billion other products, 7 billion Mac, 20 billion services, 9 billion iPad, $65 billion iPhone. So everything is down except services and iPad. iPad revenue, interesting. I didn't expect iPad to be up and services up. My argument for buying Apple, which I do not buy Apple, but it would be the services revenue, right? We talked about this on the Daily Cowbell today when we recapped big tech earnings, which is, remember in 2010 or 11, they would give you the phone for free at AT&T or like T-Mobile or whatever. They would give you the iPhone for free and you would have like a 2-year contract. What if eventually they give you the iPhone for free and they just charge the crap out of some monthly services to get you to pay, $30, $40 a month in services because you get the phone for free and then you end up paying a little bit more than the phone per year? That may be the next, avenue of growth. They're making 40, 50% margins on the phone. So the phone is a great business, but it's just a question of how much you can, grow that phone.
It's trading at 24 times earnings, and you have unknowns about what's going to happen in the next quarter or two. So I think the stock is dead money for the next couple of quarters.
Dead money. Okay, so what's a fair multiple you think for an Apple right now?
Well, I mean, what are you getting, right? I mean, you just have total revenues down 5%, right? And earnings are, at best, if things change, right? If supply chains get better and demand comes back, at best, you're looking at mid-single, upper single-digit revenues and earnings. Are you going to pay 24 times for that? That's not something that I feel comfortable doing.
If it came down to 18 times, is that you say, okay, I like that?
Yeah. Possibly.
I agree with her 100%. You're paying 25 for earnings for lower revenue growth. Maybe that accelerates in the new year. I don't see it with Apple. There's just too many better stocks to buy in the market that would be interesting than Apple. All right, everyone in the chat is talking about the Cybertruck leak. So I guess I gotta pull up this video of this leak. So can someone, or let me see if I can find it. Jen, I'm gonna go to your page. I feel like your page probably has it. I saw the video. It was cool. It wasn't. Oh, there we go. We got it. All right, here we go. So it's 8 seconds. Let me share this. This is on Jen's page, by the way. You guys should definitely follow her. Great Tesla and finance content creator. All right, here we go.
Elon! Hey! Yep. Hey, Elon. Hey.
Wow, Elon was in there. Look at that. That's Elon. That's Elon right there. This is a pretty, bro. It looks like a toy. It looks like a freaking toy. Like, does that not look? Look at that. Look at how tight. Like, bro, it looks like you touch it and like you get a paper cut or something. Like the tires don't even look real. That's crazy, bro. That is wild. That is wild. Vitaly is here. Vitaly is here. My co-host on the Daily Cowbell show that will be out in another hour. I announced here first, sold one of my calls this AM. Thanks for the Cowbell audience. Took 200% profit. Will only cry in 2025 when it's much higher. Vitaly, I think that's your Meta calls, right? Vitaly, if you guys don't know, he was buying $100 strikes on Meta, and he was buying a lot of them. So look, it makes sense. Vitaly got to take. I was telling you to take some profits too. The Cowbell audience told him to take some profits because he asked the Cowbell audience, should we take some profits? And it's time to take some profits. I think Chris also sold some calls yesterday, or no, sorry, not sold call. He did something interesting. Let me read what he texted me. Chris said that he sold the counterpart at a higher strike on his calls on Meta. Now, I don't know exactly what that means, but he did something technical. I don't think he made any profit yet, but he did something interesting. And so he's letting it ride out because if you believe in Meta, you believe that, it's going to keep going. I just put the Cowbell link in the description. You guys can check it out. It's just a fun show. We're getting a little bit more of our audience now that me and Vitaly are doing it consistently. So you guys can check it out a little later. That video has been out for ages. Oh, well, first time today I'm seeing it, to be honest. You never go broke taking profits. I agree. You never go broke taking profits, which is why sometimes you need to take profits. And I used to believe you should just keep DCAing forever, but like it's nice sometimes to just make a little money on the stock while you're working with it. Let's take a look at something more around Meta. Take profits in Meta. Let's give another bull case to buy Meta. And Chris said he sold 250 calls against my 150 calls. Okay, so that makes sense. So 250 strikes versus the original 150 strike. All right, why should we take profits in Meta?
Yeah, so it's funny. Here we are 1 quarter ago. Note out to clients saying, this is a terrible chart. It was titled Outright Speculation, buy before earnings. Well, you know what happened, of course, on October 26th, earnings came out, and the next day, Meta dropped 24% on an earnings miss. Well, here we are, interestingly, on another earnings miss, and it's up exactly 24%. Same value traded 20.
And that right there, they missed earnings by 24%, but they're up 18%. That's because the valuation just got stupid, right? And for some of these stocks, if the valuation gets stupid, they're just going to run up.
$8 billion on that day, 3 months ago, $24 billion today. So what to do here and now? My inclination is to fade this move. You've got an extreme re-rating of a stock, but it's just that. It's a re-rating to a level where I don't think there's a whole lot of follow-through. Let's look at some charts and try to figure it out. So what we know is you have moved.
Okay, so now he's going to get into the charts. I want to look at Gene Munster talking about Alphabet earnings as well. So let me pull that up right here because that's going to be an interesting one to analyze here. Alphabet remains the fabric of the internet. Now, again, if you guys are just came recently, I was using ChatGPT last night over Google search, and it really got the job done for me. And it was the first time I finally felt I might not need to use Google for something. So let's listen to the bull case continuing for Google.
You're just talking about Alphabet. You think that was the worst of the three. Why?
It was, and ultimately because I think that the numbers for the March quarter need to come down. And I was acutely listening to Ruth's commentary about March. She was a little bit opaque. I wasn't able to stay on for the Q&A, but that's the key reason here. And we got to look at what the numbers are for this year. It's all about what's going on going forward. When we look at the three tonight, Google was the one that had the highest growth rate relative to expectations. It was a 3% growth rate in the March quarter. Most of the other companies, we look at Apple and Amazon, are flattish. And so that piece was a factor in giving Google the lowest grade here. Ultimately, I think the company is still the fabric of the internet. I think they're still going to do great long term, but that's why it scored lowest. And I just want to contrast that quickly to Apple when we think about their results. They missed the iPhone. It was down 8%. The street was looking for down 5%. So they are seeing the macro. But a big part of the miss too was the Mac. That was about a 15% miss. The reason why the Mac missed by so much was because they had old products in the December quarter. They just updated those a couple weeks ago. So we're going to see a rebound in Mac. And when you put those together, back to the core question about what's the growth rates and can they exceed them in the quarters to come, Apple is probably best positioned of the three to exceed the March quarter. The street's currently looking for flat. We'll see what that happens after they give their commentary. And then it goes to up 2% and up 6%. So I just think the setup for Apple looks good over the next few quarters, where Google, it's more muted.
When you going back to a comment made by Ruth Porat, you interpreted her comments about March being opaque, meaning you don't get a good read on what she's saying about the quarter, how business is shaping up.
Yeah, she was talking about just like improvements with their advertising business, the search business from AI, and integrating that more closely. Also talking about their focus on short video, very similar to the Reels and TikTok conversation. But it lacked kind of the punch about what are you telling us in terms of overall growth rate.
And this is what I was saying at the beginning of the stream. It's like the earnings call was just not good. And I think that's also why the stock went down a little bit. Like they did not give a clear trajectory for what they are focusing on. Are you focusing on YouTube shorts? Are you focusing on AI? Like obviously AI, but like how exactly are you focusing on AI, right? So like there was a real lack of clarity. That doesn't mean, you know, the company's bad or anything. It just means that investors at this moment are really looking for what is the long-term potential of buying Google.
Rates. And so that's why it wasn't very helpful. The stock really wasn't doing much just after she had given that commentary. So I think other investors are kind of viewing these as more or less neutral comments. But my take again is that I think that the street's probably going to have to lower their numbers for Google and for the March quarter. And if I can just kind of bring all these three together, ultimately, I think that this was a dodge bullet. These are misses across the board. It could have been worse. And I think that the optimistic part here is that the growth rates are going to improve across the boards for all three of these companies. And so I think after investors kind of settle in with processing these results, I think they'll look forward and be more optimistic about what they're going to grow in the back half of the year.
Gene, it's Karen. Thanks for being on. Did they say anything about breaking out DeepMind or something? I didn't really get that. Did they discuss that at all?
If they did, I missed it. There has been discussion about, about breaking that business out, but I missed it, Karen. I can say this from DeepMind is, of course, they're kind of at the center of their AI initiatives. And maybe you're talking about this in the lead up too, but it's pretty clear. I think Dieter might have touched on this too, but it's pretty clear that DeepMind will give birth to a ChatGPT competitor. I suspect we're going to get more details on the call. It could be in the next month or two. That's a big deal because ultimately, if they can integrate a ChatGPT version into the power of their search and bring real-time information to that experience, that's something that ChatGPT doesn't do today. It's a couple years old, the information. That's something that I think is going to be a lever here for.
Yeah, and the question is, again, it's not a question of do they have a ChatGPT competitor. We know Google has a ChatGPT competitor. Can they put it out and make money off of it? And again, if they give you the answer, you don't need to click on an ad. And so that's what OpenAI is charging $20 a month now for ChatGPT Pro. So this is a very complicated issue. It's not that easy for them to just give out the tech, because if they give out the tech, they don't get the revenue unless they charge for it, but they don't want to charge for it. Think about something like Facebook, right? Facebook made $59 per user, their ARPU, average revenue per user. By the way, ARPU always sounds like the guy from the Simpsons, Apu. So every time I say ARPU, I'm like Apu. In the US and North America, Canada writ large, for the last 3 months. So last quarter, every month, if they wanted to charge a user to use Facebook, they would have to charge them $20 a month, 20 times 3, about $59, right? $60 in order to get that revenue, versus giving the product for free, causing no friction. You don't have to put in any of your credit card and you just use the product, and they make $59 from you from ads. And some of those people, it's like, they're hundreds of dollars because they click on many, many ads and consume many, many pieces of content that are paid for. So subscription has always been a crappy business for social. It's always been better with that. I mean, look at Spotify. They can't make any money because all their subscription revenue goes, like, advertising is a great model. It's just a question of if ChatGPT gives you the answer, you don't need advertising anymore. Let's look at Kathy Wood. She has just made a statement that ARC Innovation is the new NASDAQ. Let's take a look at what she had to say.
After a 67% drop in ARK Innovation, the ETF last year, and I know it was a tough year for many assets. Do you find any of your investors kind of treating ARK a little bit, more cautiously?
I think one thing that happened last year is we were able, with a number of papers, we called it our ground war. We were trying to help investors and advisors understand that if you take a look at truly disruptive innovation, which is all we do, and you look at other growth portfolios, large cap growth, growth generally, as well as the major benchmarks like the NASDAQ, you won't find much truly disruptive innovation in them. And so as we were getting hit so badly, what we also saw is investors taking tax losses in some of NASDAQ and other strategies and moving into our strategy, which was hit so hard because they did believe that we were going to rebound faster. We were hit the hardest. Our research would suggest that the $200 trillion that we expect by 2030 to be the market valuation placed on disruptive innovation, that hadn't changed. That hadn't changed. And so if you have a 5-year investment time horizon, yes, you move into our strategy. And oh, by the way, we are the new NASDAQ, which is one of the ways we were trying to convey, look, if you want to look at the future and truly disruptive innovation, the way the NASDAQ performed in the 80s and 90s, that's where we went for innovation. Well, okay, look through that now. You will.
She doesn't talk in billions, okay? I don't think Cathie Wood is a fan of the famous song by Michael Jackson, Billie Jean. I think she's a fan of her own new song called Trillie Jean, because she talks in trillions. 200 trillion by 2030 added to the U.S. economy. I don't know exactly where that money's coming from, because money is not printed out of thin air. It has to come from other places. But that's how she's talking. Now, here's an interesting stat about Cathie that I want people to recognize. Cathie Wood of ARK said artificial intelligence will bring 200 T of market value to the economy. Palantir was the #1 leader worldwide in 2021 in AI software sales. That's not that's just facts. This is a picture right here. This was one of the studies by the IDC. Cathie Wood sold 37 million Palantir shares in February 2022. So when you say AI, and if you're not using it as a buzzword, if you're actually talking about artificial intelligence from a business operations perspective, is $200 trillion worth of value, and then you sell the company that's making the most money from selling AI. I mean, it's a little interesting to see your thought process there. Now, obviously, Tesla, I think, is the current best use case of what AI is doing, obviously from a full self-driving perspective. And then you've got Microsoft with ChatGPT, but it's just hard to, like, what is Microsoft not going to be an AI player by 2030? And just think of this, like Microsoft, what, 1.7 trillion? Let's say Microsoft decently 3-4x's to 5-6 trillion by 2030, which, would be amazing for that to happen to a big tech company. Cathie's talking about 200 trillion. Apple can barely justify a $3 trillion valuation. Where are these $197 trillion coming from? Because it's not coming from Roku, and it's not coming from Zoom. It's not coming from Teladoc. It's not coming from Coinbase. It's not coming from Bitcoin. It's not going to be $1 million a coin. If you think it's $1 million a coin, you're an idiot. So where is this $200 trillion coming from? It's definitely not coming from Palantir either. Like, it's not coming from anywhere. So it's just interesting to see her say these things. It's very interesting. It's not a matter of if Cathie will buy back Palantir. It's a matter of when. Bro, when that happens, that video that day will be epic. I remember the day she sold out, and I posted a video with me and her and like a heartbreak emoji. And I did a monologue about me breaking up with my girlfriend and how like my old ex and how it has to happen and how I was breaking up with Cathie officially. It was a fun video. It's time to take you back. It's time for us to talk again. But that's it. Did you say Tesla's the leader in AI? Well, I mean, Tesla from an operational use case of what they're trying to do with AI and a market value. Like if they get AI right with FSD, generative AI to an extent, right? They are, I mean, I don't know any other company that's really going to be leveraging AI like them that's going to create the market valuation they would from that. Meta's up 3%, 194. Market's flipping a little bit. Apple at 152. Amazon down a little bit, 5%. Obviously, their earnings weren't the best with guidance. SoFi's up 1%. Palantir's up a little bit, but down 3.62%. Tesla 193. Look at that. Tesla broke out of the 180s. Look at that. Tesla at 190 hit 196. It's not crazy to imagine going it to 200 today. Tesla's just, it's going. It's running. AI, C3 AI up 9% as well. Lucid Group up 3%. Market's running a little bit. Market is running a little bit. Kathy, we were on a break. Exactly, Kathy. We were on a break. Come on now. Pouncer just released a video. Oh my goodness, guys. Every time these guys, like, their marketing is just getting insane at this. Oh, it's just a small bit. It's interning at Pouncer. Okay. This is like, they put out a lot of different videos. All right. This is a 4-minute video. I'll react to this later. I got to go now. Going to New York today. I'll be standing outside of Gary Vee's office trying to get his attention. We have something interesting. Follow me on Twitter if you want to see how I'm doing it. It's going to be super exciting, super fun. At Amit is Investing. Chicken Genius video is out. I'll watch that later as well. He's probably going to talk about how he's doing something and then do whatever he's doing. I don't know. We'll see what he does. All right. We're ending up the live streams for the day. First of all, I just want to give a shout out to everyone who joined the live streams this week. I mean, it's really awesome. I think we averaged like 330 to 340 every single day. To be honest, at one point we were hitting like 415. So means a lot. It's cold as F in NY. I agree. So I'm bundling up. I have my scarf. It's over there on the bed. I'm going to wear my scarf. But I appreciate you guys. Enjoy your weekend. Enjoy the rest of the next couple of days. We'll be back for the market open on Monday. Again, thank you all for joining this week. It's been an awesome week. It's been a fun week doing the market open. And yeah, have a great, Gary's waiting for you. He just tweeted about it. That's going to be awesome. And yeah, that's pretty much it. Have a great weekend. Miyoko, have a great weekend. Couple comments. How do you think the Fed will take this euphoric market with the numbers coming in like the jobs report? I think they're going to wait for CPI in February and then decide what they want to do. That's my opinion. But we will see what happens. Stalking the guys cringe. It's not really stalking. It's something a little different. But honestly, sometimes you got to be cringe if you want to get some stuff done. All right. Thank you, everybody. I will see you later today. Pouncer Weekly, SoFi Weekly, and then Monday morning on the market open. Have a great day, everybody. Bye-bye.